in was, if a company has a lot of directors, do I need copies of documents from all of them?
Okay, again, this is a really good question because the answer is a little bit grey. So if you look at Regulation 28 of the MLRs, it says that where a customer is a body corporate, and I'm just going to look at the director section of the regulations because there's a lot of in between information. So where the customer is a body corporate, the relevant person, so the person doing the ID and V, must take responsible measures to determine and verify the full names of the board of directors, or if there is no board, the members of the equivalent management body. So that's full board of directors and the senior persons responsible for the operation. So yes, you need to ID and V all directors and the persons of significant control. Now, for the purposes of this regulation, it then goes on to say and give a definition of verify, which is, so it says verify means verify on the basis of documents or information in either case obtained from a reliable source which is independent of the person whose identity is being verified. So that means you need to take documentation, so official documentation, so that's your passport, your ID, your driving license, your proof of address, so your utility bills, your council tax bill, whatever you is in your policy to take, for all those directors. Now, the complication then comes where you look at the CCAB guidance. So that's the Consultative Committee of Accountancy Bodies. They have created guidance for the accountancy sector, they being the supervisory bodies. I think there are 5 of them. So you've got ACCA, ICAEW, and a few others who wrote this guidance that all supervisory bodies have adopted and agreed to. However, when it comes to identifying directors, in Appendix B, when it's talking about client due diligence, it does say for a normal risk client, the business should verify the identity of the director who is the key client contact. Verification of additional directors should be considered for high-risk clients. So it doesn't agree with the legislation. So Calathea Solutions would always suggest that you identify and verify all directors. That is what the legislation says. That's what the law says, even though the guidance is different, because then it becomes all a bit subjective as to who is normal risk, who's high risk, and making sure that your supervisory body agrees with your definition. It all gets a bit woolly. And we know from experience, Mike and I, that some of the supervisory bodies actually don't necessarily agree with the CCAB guidance that they've signed up to adopting. So they will say, no, you need to do all directors. Other supervisory bodies are a bit more lenient on it. So I'm afraid I haven't really given you a straight answer to that one, but our advice is to identify and verify all directors and persons with significant control when they're different. And again, where your person of significant control is another corporate entity, work your way back to the ultimate beneficial owner and their directors too.
Yep. Thanks, Lindsay. I know you said you couldn't give a straight answer, but I think that was